necessarily indicative of future results. And also these are not recommendations to trade. This is just how I saw the markets and what's set up and how to manage the trades as they happen. Okay, so let me get you into just the overall context. We're looking at August 19th. I'm going back to that day because it was another one of those days where there was a clear setup to sell, which then resulted in a trade that was that did not achieve its potential, and then a later setup to get long that kind of covered some of the risk involved, and it just this has been kind of the story with the market since the low of April. We're looking at the NQ today. The NQ has been on a tear, as many of you know, just a lot of money going into those stocks, a lot of liquidity in the market that's seeking returns, and the returns are in the tech stocks, which the NQ is heavy on. The NQ had made a new all-time high on August 18th. It tested higher overnight, but it was really weak in the overnight session. So what was setting up for the session was what it's setting up for is a potential short, a potential rotation down, and then because we had a nice value area the prior day, if it manages to get down there, then we're looking to get long the value low, and the trade management scheme is very wide in the NQ, very wide. We're always looking for a 1.1, 1.25 or 1.5 R return on our trades to skew things properly. If you don't understand what that means, I urge you to go to the key webinars and watch the one on risk management, where we go through a Monte Carlo and show that if your trades have a much bigger stop than they do a target, in other words, you're trading for less than one return of risk in terms of profit, it's really, really difficult to have a long-term equity curve. We ran that on 1,000 random trades, and no matter how many times you run it, the instance of the equity curve being positive with 1 R or less is more and more rare. Not so when you exceed. So the trade management scheme here is, and I emphasize this for the session, is for scalping. The NQ is a scalping product for me. It is not a structured trade product, and the reason being that it is very thin. It is very thin. It is very fast. It's very fickle, and it runs on its own. And so I don't sit around just like the trade I just posted in the chat room, the short from, I said the ideal setup was 11,975, and then a few minutes later, managed to get in at 76 quarter short in the NASDAQ just now. This is today, the 27th of August, real time, and then got the scale at 68 and a quarter for 8 points, and then it was shooting for 47.75. That's 11,947.75. I moved my stop because I tightened my stop because I did not want it to flash around and then push straight up from there, and it ended up stopping me out. And now the NASDAQ, and since then the NASDAQ has traded approximately 100 points below. So that's just the kind of product that it is. The webinar was open to the public. This is not...
Yeah, a couple members have brought it up, and I got an email that's normally just for my public, an old email that CT sends for public. So I'm thinking based on the numbers and that I just wanted to give you a heads up that I think this is an open webinar.
Okay, well, I just work here, man.
So if anybody who's not a member here is to join us, welcome.
Yeah, okay. I didn't know that. These are normally reserved for members, but if you're a member of the public, if you're not a Convergent member, will you type yes in the chat room? In the chat?
Yep. There's a number of them.
Oh, interesting. I did not know this. I wasn't aware of this. We probably should highlight whether an event is public or not in the calendar so we know that it is. It doesn't change anything. I don't really care, but normally we do these for Convergent members. So welcome to Convergent.
And
Welcome to Convergent, and just
enjoy.
you're going to have a lot of questions. Go ahead, Yoda.
I was missed it because I was dealing with this. Did you give your disclaimer, which is particularly
Yes,
important?
I did.
Okay.
Again, none of these are recommendations to trade. So here's the trade underway. So here's the problem with this. Every time I pause the software, it takes it a while because it's processing a ton of tick data. What you're looking at here, which seems kind of crazy in terms of the chart. Let's fix this. What you're looking at here is the NQ chart. Sorry, things don't operate as cleanly when we are doing these replays. The software doesn't handle it so great. So I have to kind of tinker around a little bit. But our goal with these anatomy sessions is to go over a trade setup and walk through what the thinking and the process is. I'll change the formatting a little bit for a public webinar because a lot of this information is proprietary, but overall, we're looking for, this is the prior day's profile right here in blue, and I can switch on the full session profile, but we're looking at just the day session here. Let's look at the overnight session so I can set you up with the context. Switching charts over to the overnight session. And what has happened here? Okay. I guess because I'm paused, it is not. See, this is the problem with this. The replays are just not as smooth as I'd like them to be. So I think it reset once I changed the session. Let's see what it does now. Here we go. So there's the overnight session. This is the overnight session. This is the day session. The market just opened and it's testing. Let me switch back. It tested the prior day's high, which was 11,415 and a quarter. And so, as I said in a prior slide here, I'm looking for the short. The short actually set up quite early on. The short was looking for a test, really was looking for a break of the prior day's high, and a rotation through, was looking for a zipper and a break. And the trade was the short off of 11,400 and was aiming for the prior day's point of control, which is right here, which was hit right at this point. Again, the context for this session is that we put in a higher high overnight and we came back into the range. We have a valid value area from the prior day. The prior day ran up, made new all-time highs. The goal is to look for weakness on a test of the prior all-time high and look for a short. We're looking for a rotation. Again, the trade management scheme is as follows. Looking for a 14-point stop, 12-point scale, and 28-point target. And as I said before, I knew this was members can go to the key webinars and look at the trade management, the risk management scheme, or the risk management webinar that goes over the Monte Carlo simulation, where we want to always keep our risk reward to greater than 1. We call it 1R, or 1 risk factor. So this is a trade that worked out, but because of the way the market has treated the shorts, this trade ends up closing out relatively quickly. So from the 11,400 short, we get the scale and the target, the main target being the prior day's point of control. It's always a key target at 70. It finally lets go. You could see from the open, it was an open drive down, went right to the point of control, tested the high, and we're looking for that point of control from the prior day. We're looking for that point of control from the prior day as a key target. At this point, the trade is closed. So the second trade that sets up is, as I said, the second trade that sets up is value low, looking for value low again with a 14-point stop. So we're looking for 38 to get tested. Here's I like to use the volume scope or the footprint, but this product runs very, very thin. And so what I have to switch to is a 2-tick or a half point by 20, and I'm looking for a fat bottom, just like here. I'm looking for a fat bottom and a retest for a pop higher as an entry, as one entry method. Again, the NQ for me is not a structured product; it is a scalping product. So here's where it's testing value low again at 38.50 or so. Just got to 38.25. So we're looking now for, since the trend is down, we're looking for a push through, a push higher, and a retest down, and then that would give us the entry, and then the entry would look for 12 points on the way up. So in this case, we would look for 350, and I would look for 28s on the way up, which should put us ahead of the 67 or so, which is the next point of resistance. So I expect this to continue to extend lower. Note that the delta is pushing lower. Note that the delta bars are still printing red. See, these delta bars are printing red. So we want to hang in here for a minute. The problem with the NQ is that it is very, very quick to turn. So you have to watch a lot. You can see on this particular day, Fangman is still negative. Fangman's still pointing down. There's really not much support. Apple's trying to hold the market higher. It's holding on its own. These are all percentage change from the open, which is at 0. Here's the rotation, and what this does is it kind of gives us a bit of a runaway play. Here's the I don't want to pause this while I'm talking because it takes forever to get it started again. Here's how it plays out. We go drop, we get an inside bar, we have a lower low, and then what we have to look for is the break of the inside bar. And so the entry here is at 46 long, and again, we go with the trade management scheme looking for 14-point stop, 12-point scale, so that's 58 for the scale, and then 64, 74, 74, I think, on the target. These are all bracket orders in this product because it's so quick. So here it pulls back. See how this makes a run? Pulls back. That's what we're looking for. Pulls back. If we don't get the break, we'll look for the pullback and then look for the long, and this would be the key target up here at 68.74, which coincides with the overnight low and a stock zone. This trade is now complete. These trades seem very, very quick, and they are. I'm running this at 30 times speed, and the reason is I don't want to sit here in between trades. And the problem with this product is it is very, very high in terms of it's kind of a very it's a very high trigger product in terms of FOMO, because no matter what you do with the NQ, you either shouldn't have taken a trade because it was obvious it wasn't going to work, or you took the trade and it went just like I talked about the short that I took, that I narrated live in the Convergent Head Trader channel. I only took about 8 or 9 points out of it on the first scale, and it ended up dropping 120 points. There's always this FOMO factor that comes with the NQ. Look at this thing run. So we're keeping it, again, because we're scalping this particular product, whereas in ES, we're looking for more for structured trades. There's always this fight back and forth between, should I hang on, should I let this run, or should I close it out and just scalp it? And in my opinion, the way, when I've let things run, it just seems to, unless it's a long, it just seems to really end up costing too much to hang on. Oftentimes it'll run 50 points, come back to the entry, look like it's done, and then turn around and run another 100 points. So this is why this is more of a scalping product. When the ES is slow, the NQ's got things going. Here's just, this is separate. This is not a setup I was going to talk about, because the two setups are done for the day. But the this is really important. The way this this Fangman index that I created, it's a market cap weighted index of the 7 Fangman stocks. This, as long as this is pointing up, it is relatively advantageous. There's an edge to it continuing higher. As Apple continues to drag the other stocks higher, FB is now ahead. This thing is likely to truck along with very minor pullbacks. And the way the NQ, and I'll give you a little hint, the way the NQ does these pullbacks very often is it tests, it'll go and test into the wicks or the candle of the prior bars. So you'll see that on 5, 10, and 15-minute bars. It'll very often pull back. So if you look at, so in this situation, let me see. So it breaks higher and it pulls back into the where the wick starts or the excess starts on these candlesticks. So you could do this with the 10-minute, and I've noticed that this continuously takes place. So as this thing pushes, let's say ideal entry now for a structured long would actually be all the way down at the 1130 373 or so. We have volume there. We have the stock zone. We have the overnight low, and we have this little wick here that we can lean on. If you're scalping, I'm finding that it does go from bar open to bar open in its rotations. The other piece that it often pays attention to is where it had a battle, where it left volume behind. I'll call these intra profiles. These are little kind of zippers or consolidation areas that the NQ likes to test out. Just now it tested the full session VWAP, or actually this is the normal session VWAP. Let me switch sessions so we can see the whole thing. And again, it's hard to redo these replays without pre-recording it because of the way the tech works. Here's a full session VWAP. Yep. Full session VWAP pullback. This is, of course, we talk about this full session and mid pullbacks, especially if they're accompanied by a stock zone. There's a tendency for it to give us a chance at least to get the scale out. And the scale out's looking to cover much of the risk on these trades. This, unless there's an impulse down like we saw in the morning, there's really no reason to think short. Okay, we're still near all-time highs for the day session. The night session had a higher high. You could see this light gray area. The bars within the light gray area are the extended trading hours. The bars within the dark shaded areas are RTH. And you can see that the overnight session had a lot of play here. And one of the first leans, one of the first ideas on the short on the open was the fact that we had this volume above us that would help us hold that short, and that worked out pretty well. The problem with those is you have to jump in and participate very early on, very quickly. Anyway, the two trades I wanted to show are there. Here's the range extension up on the IB, the initial balance. So again, there's no reason to get short this thing just yet. Looks like Fangman is turning back down, but still positive on the day. So still not much of an argument for the shorts here. Shorts should be seen as pullback areas to get long. The point of control shifting to the upper end of the day. The time now is 10:06 according to of this replay. It's 10:06 Central, 11:06 Eastern. So it's we're getting close. We're getting to about 20 minutes or so to the European cash close, and so we're likely to get slow. We've poked through the initial bounce high. We've made a new high on the RTH, but there is no reason for us to look to the short side. Okay, the reason I'm selecting these parameters, the trade scheme here, the 14-point stop, 12-point scale, 28-point target, these come directly off of our rotation charts. Let me see if I can pull that up while this thing is messing around here. Rotation. This is on the NQ already. So this is as of this day. This chart is telling us that if we used a 3-bar fractal, so what we're looking to do with this chart, what this chart is designed to do is it's designed to identify 3-bar fractals, and 3-bar fractals look like this. So we have a bar that's going up, we have another bar that's higher, and then we have another bar that's lower. As soon as there's a bar that's lower than that, the system puts a dot and tells us what that high is, whatever it is, 412.75 or whatever. And what it's looking at is it's saying, hey, let's mark the highest bar of the bar before or the bar after, and that'll be a swing. And then what it'll do is it'll wait for that same structure to happen. And as soon as we get a 3-bar fractal that's shaped this way, it'll put a dot, it'll tell us what it is, in this case 388, right? 25. Wow, that looks like Sanskrit. And it'll measure what this magnitude is. And you can see here it's going from there to there to there to there, and it's constantly computing what the rotations have been. And in this situation, I'm asking it to use 10 sessions because I want a more responsive rotational study here. And I'm using a 1-minute bar because I'm jumping between a 20-tick Renko in the NQ or 5-minute, and it doesn't really make that much of a difference to me. I'm really trading in a 1-minute time frame, so to speak, because I'm scalping, and that's the smallest time frame I'd look down. I could go down to a 2-tick or something like that, but I don't really. It's not necessary to do that. Once it computes all these things, it gives us a profile, a statistical profile of what things look like. So the statistical profile here is saying that the up rotations, what we would consider to be normal in terms of up rotations, is about 18 points in the NASDAQ at this point. And then a down rotation is about 17 points. So about 17.5 points, up to 17.5 points is considered to be a normal rotation. Normally, we would want our stop outside of that. So I said 14 points. My study's a little more recent than this, but I said 14 points. We would want our stop outside of what we would consider to be a normal ebb and flow. I would want my stop outside of that, right? So if I'm going to get stopped out, I want to be outside of that. But if I got into a trade, I would want my scale out to be just inside. And remember, this is not for binary trading. This isn't for a one lot, hey, I'm going to use an 18-point stop and a 12 or 14-point target. Then your R factor is upside down. It's not really the way it should be. This is just for a scale out. And the goal for the scale out is to mitigate the risk, is to reduce the risk of the remaining lot. And it's our goal is to make money on the remaining lot. That's the goal. We want to hold the second lot to overcome the 18 points. So we're looking for, in this case, between a 12 or 14 point scale out, we're looking for something that gets us over 18 points in aggregate on the two contracts on average for it to be feasible. So that's where, in case you're wondering, well, how are you coming up with these schemes? It's statistics. It's basically going back and looking at looking back at the harmonics. These are called the harmonic rotations. We're looking at the statistical harmonics of the product, and we're sizing our trades for it. For example, if the market now expands and it's normal for the NASDAQ to have 28-point rotations, with the most common rotation being around 12 points, it's kind of silly of me to put my stop within that 28-point rotation on a 1-minute bar chart. The time frame is very important. So if I do that, then I'm basically asking for trouble, because then the market, I'm putting my stop well within the noise that this market is going to make as it ebbs and flows, as it pushes back and forth. I'm putting my stop well within the noise. Here's how it played out. As I said, there is no reason any dip, any rotation down, given the structure and given that we're above the mid VWAP. We had tested the value low very well. So here's value low, right? 38.50. We tested that down to 32.50, well within our stop zone, and rotated up. The auction, or the narrative, is saying don't get short. In fact, yesterday in real time, the 26th of August, is another example of people getting short and getting blasted because they think it's done. There's nothing about this that says this is done. It's continuing to build value higher. It's continuing to build high volume nodes higher. And so there's no reason for me to get short. Anyway, there are no other trades that I looked at this day here as setups. So I have nothing more to offer in terms of setups, other than to say, hey, I'm going to continue to look long on this type of day, except when. Let me ask you, what would need to happen here for me to get short? I asked the same question yesterday on Convergence chat room, and got a variety of answers, many of which were correct, in my opinion. But what would you need to see to become a confident short here in this particular market? Anybody?
Impulse down.
Okay.
Lower high.
Is an impulse down by itself enough?
Well, you've got three answers. One, impulse down by itself. The second one is impulse down followed by a lower high. And the third answer is an impulse down through the mid.
Right. So what we would be looking for, if we were to change our perspective on this particular day, as the market pushes up, we would want to see an impulse down. Okay, this is an extra wide or 90th percentile rotation down. And then the impulse down by itself is no good, because many of you have seen the market just impulse down just like it did. This is an impulse down. And then it rotates back and it just goes for highs. What we would want to see actually is an impulse down, is for it to impulse down, pull back, and then is unable to get any higher, and then it starts to continue, and our trigger for that is on the turn. So normally it impulses down, so the bars will look like this, would look like that, and then it would start to form these bars that are that looks something like this. And we're looking for a break of these bars to trade in the direction of the impulse, with our first target being the impulse low. That becomes the target to manage risk. So we're looking for it to kind of put a rounded top or a zipper top, and to start to rotate down for us to confidently short. We would need an impulse down first. We would need failure, the market to actually fail to go higher, preferably against a known value, against a stock zone, an IB, a mid, a VWAP, something. And we see it fighting there. Hopefully there's some volume there, or a high volume node. And that's something we can lean against, get short, and that becomes a high probability short. And we would target the last low and then look for a normal rotation down. What you may ask, well, what is an impulse in the NASDAQ? Let's look at that. An impulse in the NASDAQ is a 90th percentile move. That's 28 points. 28 points in the NQ, okay, on this particular day. It's a little different today because we're looking at the 19th here, and things have changed quite a bit. But look at that. This is starting to be an impulse. It is almost an impulse. There it is. It's nice to have that while we're talking about it. So when we cut this down to a 20-tick Renko to see what's going on in here, this isn't quite an impulse yet. This isn't that big a rotation, actually. Yeah, it is. It is. It's an impulse now. So here's what it's funny we mentioned this. I actually didn't play this day to be talking about it. But so here's what we were just mentioning. Now we're looking for it to bounce up, and we're looking for it to consolidate and round off before it starts to rotate lower, and then we would target this last low. This last low is a little bit lower than the prior. So here's what we're looking for. We're looking for that, and we're looking for the break. Now it's a quote unquote, nothing's guaranteed, it's a safer short at approximately 93, 96, something like that. It's a safer short, and then look for this last low. And then if it has anything in it, this is RTH. If it breaks through the RTH, this is likely to continue lower. Look for it to chop around in this high volume node here. So look for chop around 75-ish right here. Look for chop. If it doesn't chop, this is a short you want to hang on to. Here's the chop in the high volume node. Then you would target 60, the low volume node. And then if it doesn't hold that, you would target this 57 or so. And once you get through the 57, so here's the 60, we would expect it to bounce a little bit here. If it doesn't, you have pretty good strength. On the short side, there's the 57. So now, as long as it does not clear this high volume node here, you're good. You want to hang on to this short. It's kind of a coincidence to be talking about this at the time that it just happened in the replay. So there's the new low. So actually, that worked out pretty perfectly. They don't always work out this nicely, but this, we want to stick with the long side until we see an impulse, failed, test higher. The impulse by itself is not enough, because the impulse could be an impulse down and an impulse up. As many of you have seen in the last month, we want to see it round off and then start to move. That gives us a higher probability short against an uptrend. Okay?
On that trade,
that's it.
Where would you have entered if you're already targeting just the low and you're waiting for it to turn? You're not giving yourself much room for a scale out, are you?
This isn't a very good, this isn't giving us a good spot to scale, because there's a lot clustered in here. I mean, this trade would have triggered around 96 with a low. Let me check this low. With the low here being 86. So it's not even giving us a good It's not even giving us a good kind of distance to cover risk. But you have to take, for me, I have to take that last low. I have to take the scale out at the last low, because what it can do is it can push through by a couple of ticks, and you can have what's called a failed auction. Failed auction higher will go through by a couple of ticks, not find any continuation, and then rip the other way. So I have to take that last low. This didn't give much room, but it was still a valid trade. It's worth the risk because of the impulse and failure to continue higher. Would have been nice if it had pulled back a little bit higher, but it didn't.
Okay. Somebody's asking for fractals. Do you calculate per day or n days?
The fractals are calculated intradays. Intraday, every rotation is calculated. It just picks up, it calculates. Look, all we're trying to do is find out the tops and bottoms of swings. And then we take the magnitude from the top to the bottom, we take that range and we are plotting it into a histogram. And then we're looking at the histogram to figure out what is the first standard deviation or first sigma for that particular product. That's all it is. And you can, how do you identify, just think like in a spreadsheet or something, how do I identify, if I look at a bar chart, how do I identify a top? What is a top? You can identify it as a top is the highest bar of the 2 bars before, 2 bars after, or 7 bars before, 7 bars after, which gives you fewer rotations but much bigger tops, or the 1 bar before, 1 bar after, which gives you many little rotations. It's just that's very discretionary. It's a function of how many samples you want. On this chart, I can sit here and change the fractal number to say 7 and recalc to 7, and I only have 276 rotations to study, or 280 rotations to study, which is statistically significant for 10 sessions still. But if I go down to 3 bars and recalc, I have 682 rotations to study. Right? How does it impact the number? The first value, the first standard deviation is 18 on this one, and for 7, it's 26, 27, 26, basically. It changes things a lot because it defines what you would consider to be a swing. And for me, I want to keep these things as small as possible because I'm scalping this product. I really don't want to sit here and hold on for these bigger trades or whatever. It's kind of like choosing to trade between a 15-minute chart, a 1-minute, 3-minute, 20 tick, 8 tick, doesn't matter. It's really a personal taste. For the NASDAQ, I'm not, although there's a lot of money to be made or lost in this product here because of how far it moves. Essentially, this is a 100-point move here. And so in the NASDAQ, I'm not really looking for structured trades. I'm looking for scalps. So my studies are built around short time frames and so on.
Somebody's asking, now that it's bounced off the IB low 3 times, does that mean that you can go long?
No, same idea here. It is bouncing off pretty good. It's getting held up in this high volume node, this developing high volume node. We would want to see an impulse higher, a shallow pullback, and then a shallow pullback with a consolidation against volume, hopefully. So if we want to get long, same structure, same setup. We're going to want to get long.
Sorry, Murad, you did have the impulse off the bottom.
That's true. That's true. The only catch with this, yeah, I guess that is true. That is true. I don't look at this product this late in the day, but that is true. There is an impulse higher pullback against the prior zigzag, and it is setting up for a quick long. Sorry, I was looking from the point I was asked. I was looking over here.
No problem.
But it is setting up.
And if you were short on that trade and you saw it come up and you saw that it formed a zipper where the mouse is, and then it came down, formed a higher low, put in another zipper. Now, if it got through that zipper above, I'd be looking at exiting the trade personally.
If you're short, yes, I would be looking for, because you have an impulse up. I would have gotten out. This would have set me up for a long. The long setup here is around 48, 47. This is a time to get out. It should not do this. If you're going to continue lower, this is a nice little impulse. If it's going to continue lower, it should not put in a higher low, consolidate, and start putting in higher highs. That's not a good sign. The delta overall is negative though, and the order flow. If you look at the time and sales here, which is filtered, the order flow is for sellers. You could see some buying coming in here and there. There's still some selling going on, but I'm not going to sit here and bet that it's not going to go all the way back to my entry. It's too much. It would cost too much to hold that strong or that conviction that, hey, Fang Man's negative, everything is negative, it's below, it's at mid, and so I'm not interested in that. In this product, I'm interested in trading the next rotation. So I'm not going to sit here and have a strong opinion about what it did. The other thing is it's neutral, right? It took out the first hour's high and it took out the first hour's low as well, these yellow lines. And so the market is telling us that it is really actively seeking buyers and sellers, and it's pushing the extremes. So as long as it's done that, it could turn either way. The delta is negative in this case, but overall, I wouldn't want to hold from a low of whatever it was. What is this low? A low from 311 all the way up to 85, and sit here and wait for the continuation. I have no interest in that whatsoever. I'm going to look to see if an opposing trade sets up, then I'm out. In this case, it would have been 47, 48 right up here. So we would have already given up, 35 points in that short if we were holding from this last impulse rotation down all the way to the low. We would see it. We would see 40 some odd points, 30 some odd points evaporate. I'm not going to hold on through that. I'm not an investor here. I'm a day trader, scalper in this product.
There's a question, do you analyze the pullbacks maybe through order flow or other methods when you have also, they say pullback and also the impulse?
Do I analyze it? I'm not sure what type of analysis this is referring to.
Do you interpret it? Do you try to look into it, or do you just say, hey, that's an impulse, that's a pullback, and
that's it. Other methods? That's it. I'm not trying to be a quant. I do create models, statistical models, and I look to validate those models or invalidate them, like create a hypothesis and a model and see how the market responds to that. But honestly, I have no interest in sitting here and, like, for example, I have no interest in saying, okay, you got out for your 28 points on the short or on the long earlier. Have you ever analyzed how far the market would have gone had you held on? This is often kind of asked, and frankly, that just brings in the FOMO thinking. I'm not looking for perfection as a trader. I'm just simply looking to take a limited amount of risk for a limited amount of profit. And to many, that may seem like, oh my God, that's terrible. You're sitting here collecting pennies in dollar moves. Yeah, sure, but I don't have a good way to predict a dollar move, so I'll collect pennies. While you're collecting $1, I may collect 400 pennies. I may lose 400 pennies if I'm not managing risk. But within that dollar, there are, a dollar has 100 pennies. Well, within that dollar, there actually may be 400 pennies to pick up because of the rotations, because of the little zigzags in between. And that's what I'm going for. I'm going for volume. I'm not going for perfection. So I'm not really interested in testing to see which impulse is this or that. I just know this is the kind of rotation. I've created kind of a frame or a sandbox around what I need. This is the kind of rotation I'm looking for. This is what I'm going to lean against. These are the important areas for me. So for others, those may be floor pivots. They may be fibs. They may be other products or other ways to look at things. And that's great for them. That's why there's no right or wrong in the way we trade. But don't get into analyzing like crazy. Like someone could easily look at this and say, hey, look, on that 400 short you were talking about, you had 100 points here. You missed out on 100 points. Yeah, so what? It doesn't matter. On a 2-lot in the NQ, there were $2,000 in that drop. $2,000 in that drop, and that's all I'm interested in on a 2-lot. That's what I'm looking for. I'm not looking for perfection. If you're looking for perfection in the market, it is just a very painful way to trade. You're more likely to quit trading before you find that perfection, in my opinion. There's no such thing.
Sorry, talking about perfection, someone's asking, so do you have a method to find a 10-hour trade with an 80% win rate? I don't think that probably exists.
That actually is the opposite of what I'm looking for.
Yeah.
I'm looking for a trade that gives me a decent win rate, 60, 65, 75%, something like that. I'm looking to do it a lot. I'm looking to do it with size, and I'm looking to do it quickly. The longer I remain in the market, the more risk I have open, the more liability I have, and I'm more interested in keeping my, it increases your costs, your commission costs and things like that. But that's a small fraction, in my opinion, versus, holding on to a trade to catch that 10R trade, which means 10 times the profit is 10 times the risk. To catch that, you may have 7 out of 10 false starts. You may get stopped out 7 times, and then you finally catch that trade, and you get 10R, and it covers all of your risk, and then you have a positive expectancy and a positive return. But that's more of an investment style. I'm not really interested in that. That's not trading. It's more investing. The trading is more find an edge, and I really don't think, unless there's an arb edge or something like that, there is no 90% edge, 90% win rate. But even with a 90% win, you can have a 90% win rate and only a 2-tick expectancy, right? Because the gains are not really making up for the much bigger losses. For example, I can create an 80% win rate on a trade, on a series of trades, by having a 5-point target and a 100-point stop in the S&P. But every time I get hit for that 100 points, I have to now do 20 or 22 times the wins to cover that. So you cannot look at win rates by themselves. It's not really describing what's going on. We want to look at win rates in a combination with the losses, combining the percentages and the average of those losses to get an expectancy. The expectancy gives us a composite of what things look like. As someone who's run a prop shop, when I'm looking at a trader's performance, I really don't care about the win rate, to be honest with you. It gets way, way too much attention, or the Sharpe ratio, or the profit factor. It's not a trading system. I'm looking more at expectancy, which means that statistically speaking, on a large enough sample of trades, if I was to invest or bet on someone with a 2-tick expectancy, I expect that over a large enough number of trades, net, I would get 2 ticks per trade, including the losses. And that's worth investing in, depending on the product, depending on what 2 ticks are worth versus my cost and risk. But the goal here is not to look for an 80% win rate. This is not what's important. What's important is to take a portion of the market. We try to just take, like, someone could be spending 95% of their life looking to catch this, right? And that looks like a home run. Boom. Caught the turn, caught the low. The effort required to do this is so massive, and the need to be right is so huge, it's not worth it. What I'm looking for is somewhere in here to maybe here, and let that trade go. Then I'm looking for something from here to maybe here with this much heat. Then let that trade go. Then I'm looking for, it comes back into the range, gets below the high volume node, pulls back to the high volume node. I'm looking for something in here to here. That's it. So I'm looking for little chunks, there to there, maybe there to there. That's it. That's it. And if I can do that properly, with controlled risk, understanding that futures are leveraged and they're not suitable for all investors, as I always say in the risk disclaimer, understanding that leverage and understanding what I could do with that leverage and how damaging it is to use low margins and leverage that even more. I am just looking for small calculated chunks. So the other analogy, and I'll get off my soapbox here, but this is a really important thing because I feel like I've been dealing with online traders for the last 12 years or so since I came online, and it's the same kind of thing. Everybody's trying to make an effort. Think of like a scene where there are all these buffalo or bison coming, and you're out hunting. You're on your horse and you're out hunting, and think of a scene where all these bison are coming at you. There are just thousands of them. If you decide to just pull your let's assume you don't have a Gatling gun or something. Let's assume it's an arrow, right? Trading is more of a precision thing. If I was to pull out an arrow and just pull out an arrow, shoot, pull out an arrow, shoot, and just hit something, it's not as accurate as saying, okay, let me pick one. Let me pick one buffalo and aim for it as it goes by. Boom, hit it. So at the end of the day, I may, out of the 1,000 buffalo that have run by, I may have hit 3 or 8 for the arrows that I have, because I took the time to define which ones I'm going to focus on, as opposed to being distracted and completely enamored by the FOMO that's generated by trading, by trying to capture, out of the 1,000, trying to capture 100. I'm good with 8. 8 are going to carry me through the winter. I'll be able to use their hide for clothing and for my teepee and so on, and eat throughout the winter. And that's all I need. Anything else is far more effort for far less return. Trading is a lot like that. You have to kind of figure out what are the boundaries for me personally, not for that cool guru with that streaming webinar telling you how to trade and how great he is. It's what is for me, what are those little boundaries? What's the box that I'm going to play in? And I'm going to focus on being the absolute best within that box. Within that particular setup, I'm going to be the best of the best. That's what trading's about. And it's hard for people to do that because there's always stuff being flashed in front of us, marketing, sales, markets that are constantly moving, and so on and so forth. And that causes us to get distracted and not focus on what matters.
Now,
Anyway, we're
we
over
were
our
out of
time, right?
but lots of questions, and I can tell a lot of questions from people who are not members of CT, and members. Some of these questions are: can we have a copy of the charts that FT uses? And absolutely you can. He provides the chart definitions to all the members of CT. So if you like to have a copy of his charts, join CT. There's also a number of questions on more information on what he's talking about. Well, we have these webinars twice a week, every Tuesday at noon Central and every Thursday at noon Central. We also have forums where you can post questions and interact. We have a chat room. There's lots and lots of information that I think you would find extremely beneficial. And I would suggest you give it a try for a month. Non-CT members are normally not allowed in these webinars, but today it was opened up for everybody. So you can get a flavor, a taste of what is available. And I encourage you to join and see what it's all about.
Actually, I think the reason it was opened up is, and the reason I was surprised is because it was sent to the wrong list. An inadvertent mistake, an honest mistake, to everybody's benefit, and we're always happy to have people on. Look, this is not intended to be a sales pitch. These webinars are not a sales pitch. They're really intended to develop our group of traders, our community, just like I did in prop, and that's what Convergent provides. You can find more information at convergenttrading.com if you're interested. But again, the intent was to do an anatomy today and not to talk about the service. But if you're interested, we're happy to have you. It's a very focused environment. Not only do we do these webinars consistently, we have a head trader channel with professional traders in it that are sharing what they're doing, including myself. And we have the market statistics reports. We have a news feed that's built in, a professional, high-end live news squawk that's included in the membership, and a bunch of other things. I invite you to go to convergenttrading.com and check it out there. I'm glad you could benefit from this. If you don't subscribe, that's cool. It's fine. We always support you in whatever you need in your trading. But if you become a member, that's always helpful to us, as it helps us grow. And we'd be happy to have you. Thanks, Yoda, for moderating, and thanks everyone for tuning in. Hopefully you picked something up today. Take care.